Welcome back to the deep dive. We're here to take complex information and, well, make it make sense for you.
Turning it into actionable insight.
Exactly. And today we are plunging into a really significant document, India's Economic Survey for 2024-25. It's massive.
It really is. Hundreds of pages.
We've waded through the official PDF and also looked at an expert analysis from AffairsMind RBI, just to boil it down to the core stuff for you.
Yep, cut through the noise.
Our mission today, it's not just about listing numbers. We want to help you really understand the key economic ideas and terms in the survey.
And why they matter.
Right. How global events are playing out in India, the challenges they're facing, and, the path they're trying to forge for growth.
Absolutely. It's about getting those aha moments with the economic language. Not just what it says, but why it's significant for India and, frankly, the rest of the world.
Okay, let's dive in then. The survey starts by setting the scene globally. Politics, economics.
It all connects.
It really does. 2024 saw some major elections. Yeah, India re-elected the incumbent government. The survey flags that as political stability. Then you had the U.S. changed presidents, Indonesia stuck with the ruling party.
And contrast that with Europe. A lot more uncertainty there.
Definitely. Germany's had 2 years of contraction. France had those snap elections causing instability. The UK shifted to labor facing big fiscal hurdles.
And they're struggling with competitiveness, right? Especially with energy costs tied to the green transition. That's something India's watching, I'm sure.
A key point. And then there's China. The survey notes their post-COVID reopening wasn't the boom everyone expected.
No, instead you've got overcapacity real estate issues.
Mm-hmm.
It's actually leading to deflationary pressure there.
Which is interesting because their exports surged. Trade surplus nearing $1 trillion.
Yeah, it's a complex picture. So the big question is, how does all this global stuff, this, shifting landscape, impact India directly?
Okay, how?
Well, it's all interconnected. The survey is clear. The pullback from hyperglobalization, that hits India's export sectors.
So they can't just rely on exports anymore.
Exactly. They need to lean more on domestic growth investment, deregulation. That becomes even more critical.
And the demographics. India's young population.
Huge potential advantage, unlike aging Europe. But, and this is a big but, the survey highlights, you need jobs. Massive job creation and serious skill development to actually use that advantage.
It's not automatic then. Requires real effort. What about supply chains? You mentioned China earlier.
Right. India still relies heavily on China for key components, like in solar energy. That's a vulnerability.
So a strategic focus is
Strengthening domestic manufacturing. Diversifying imports, looking beyond just the cheapest option right now, thinking long-term resilience.
That makes total sense. And speaking of strategic focus, the survey really talks up deregulation, a catalyst for growth.
It does. And it's not just about cutting red tape, though that's part of it. It's framed as a fundamental shift.
How so?
Moving from micromanaging everything to more risk-based regulation, shifting the mindset from guilty until proven innocent for businesses.
To innocent until proven guilty. That sounds pretty significant for encouraging businesses.
It is. The idea is to foster trust, reduce government interference, and give entrepreneurs room to innovate without being constantly worried about tripping over regulations, making it easier to start and grow.
A powerful concept. What other strategic areas does it highlight besides deregulation?
Well, investment is huge, attracting both domestic and foreign money to boost competitiveness and innovation, especially in supply chains.
Okay.
Climate change and energy transition are there too, but with a strong emphasis on energy security and affordability alongside sustainability.
Interesting point about public transport maybe being better than private EVs for now.
Yeah, because of the high import content in EVs currently.
Yeah.
A pragmatic take. And in agriculture, the push is towards crop diversification, moving away from water-guzzling crops, better irrigation, and more R&D, boosting productivity.
Got it. Now, the survey also gives that state of the economy snapshot. Lots of economic terms fly around here. Let's try to unpack some key ones.
Good idea. Globally, it notes manufacturing slowed down in places like Europe and Asia, supply chains, weak demand, but services held up better.
And inflation, there's this term disinflation, crucial difference from deflation.
The critical distinction. People mix them up all the time. Disinflation just means inflation is slowing down. Prices are still going up, but maybe not as fast as before.
Like a price goes up 20% one year, then only 10% the next. It's still rising, but slower.
Exactly. Whereas deflation means prices are actually falling. Negative inflation. The survey notes global services inflation kept overall disinflation slower, while goods inflation dropped sharply. Understanding this difference is key to understanding central bank actions.
That clarifies it perfectly, thanks. The survey also mentions ongoing global uncertainty. Things like the Middle East tensions messing with Suez Canal shipping.
Right, a vital trade route. You see this reflected in indices like the Geopolitical Economic Policy Uncertainty Index and the World Trade Uncertainty Index. They're up, showing nervousness globally.
Okay, shifting focus to India itself. GDP growth looks solid around the decade average. They mention gross value added, GVA, too. What's that in simple terms?
Think of GVA as the value of stuff produced in an area, minus the cost of inputs used to make it. It's a cleaner measure of actual economic output or productivity than just GDP sometimes.
Makes sense. And private final consumption expenditure, seeing a rebound there, especially rural.
Yeah, and that's a really important sign. It means domestic demand is strengthening. People spending money. That's the engine for a lot of the economy.
And other indicators, like PMI.
The Purchasing Managers Index,
Yeah.
PMI, yeah. It tracks manufacturing and services health. It's been showing consistent expansion in India. Very positive.
And CapEx, capital expenditure.
Right. That's investment in things that help future growth, infrastructure, machinery, tech. The survey notes continuous improvement there, which is vital for long-term growth. Plus, the external sector, services exports particularly, holding up well.
Okay, let's pivot to the financial sector. The survey paints a picture of improving health.
Generally, yes. We're seeing bank credit growth and deposit growth moving more in sync, which is usually a sign of balance.
And profitability is up because of fewer bad loans.
Exactly. Bank profits are better, mainly because gross non-performing assets, GNPAs, have been steadily falling.
Right, GNPAs are just loans gone bad, basically. So fewer of those means banks are healthier.
Precisely. Their balance sheets are cleaner. And this ties into the capital to risk-weighted asset ratio, or CRAR.
Okay, CRR. What's the simple take?
It's like a bank's safety buffer, measures its capital against its risky assets. Higher CR means it's stronger, better able to handle losses. The survey says all banks are meeting the requirements.
Good. And the credit GDP gap narrowing. What does that tell us?
It suggests a better balance, maybe a more efficient link between how much credit is available and the overall size of the economy. Plus, financial inclusion is up, according to the RBI's index.
What about the stock markets? Capital markets seem active.
Very active. Lots of primary market mobilization companies raising fresh money through new shares and bonds.
And DMAT accounts, the electronic ones for shares.
Huge growth there, up 33% by late 2024. And more IPOs and initial public offerings when companies first sell shares to the public.
Wow, that pushed India's stock market cap to GDP ratio way up.
Yeah, to 136%, much higher than other big emerging markets. Shows the relative size and buzz around India's stock market.
But there's a caution on cybersecurity.
There is. A significant chunk of cyber incidents hit financial institutions, especially banks. And the financial losses from attacks have apparently quadrupled since 2017. Serious concern.
And this connects to a bigger idea the survey mentions, financialization.
Right. It's this trend where financial markets and institutions gain increasing influence over the economy, sometimes leading to, well, potentially risky levels of debt.
So the message for India is,
Develop the financial sector, yes, but be careful. Avoid the potential downsides of too much financialization. It's a balancing act.
a tricky one. Okay, let's look outwards, the external sector. Facing headwinds, you said.
Definitely. Red Sea disruptions, Hormuz Strait tensions. They're forcing ships to reroute, pushing up costs, hitting energy trade. Even drought in the Panama Canal is impacting shipping.
And this trend of political proximity in trade, countries trading more with allies.
Yes, more bilateral deals, less focus on pure globalization. Plus, more non-tariff measures. NTMs are popping up.
NTMs, so not tariffs, but things like quotas, sanctions.
Exactly. Trade barriers that aren't taxes, they're hitting sectors like agriculture and manufacturing.
Despite all that, India's external position seems okay. The current account deficit, CAD, is stable.
Relatively stable, yeah. CAD is basically imports exceeding exports. It was around 1.2% of GDP, which is manageable. Foreign direct investment has been resilient, and forest reserves are healthy.
So the overall takeaway for the external sector?
It's a tougher global environment. Rising protectionism, more uncertainty. For India, the key is reducing its own trade costs to stay competitive, especially for exports.
Right. Makes sense. Phew, that's a lot on the macro front. Let's maybe switch gears and look at specific sectors, starting with industry.
Sure, and the big headline number there is potential. India's share of global manufacturing is just 2.8% versus China's nearly 29%.
Huge gap. Huge potential for growth then.
Massive. It's arguably the most underutilized growth engine. We see some strength. Second largest cement producer, steel demand is strong thanks to construction and auto, supported by policy.
But challenges remain.
Oh yes, heavy import reliance in chemicals, petrochemicals. Technology gaps in capital goods mean imports are still needed, though the government's pushing smart manufacturing industry 4.0.
Make in India seems to have boosted electronics, like smartphones.
Definitely. 99% of smartphones sold are now made in India, which is impressive, though, the focus is still maybe more on assembly than high-end design or component manufacturing.
Got it. And job creation within industry, where's the focus?
A lot of hope rests on MSMEs, micro, small, and medium enterprises. They create jobs with less capital investment. Lots of support schemes mentioned, like the Self-Reliant India Fund, the Champions Portal for helping them out.
Okay, let's move to services. That seems like a real bright spot.
It is. Over 55% of India's GVA now comes from services. Employs about 30% of the workforce.
And this idea of servicification of manufacturing, what's that about?
It's basically how services are becoming more embedded in manufacturing. Think design, IT support, logistics, marketing, all services crucial for making and selling physical goods.
Ah, okay. And India is strong in specific service exports.
Very strong in IT, computer services, business services, ranks second globally in exporting telecommunications, computer and information services.
Logistics improving too. Roads, rail, ports.
Major developments happening across the board. Aviation is the fastest growing market globally. Tourism is recovering. Real estate transparency has improved.
And IT services and these global capability centers, GCCs.
Huge growth drivers. They're really changing the corporate landscape in India. Plus, the telecom sector, second largest market, cheapest data, fastest 5G rollout. Quite remarkable.
So the bottom line for services.
Sectors needing skilled digital labor are set to thrive, especially with AI coming. Skilling the workforce is paramount. And like elsewhere, streamlining regulations is key.
Right. Now, agriculture and food management, still incredibly important, right? Supports nearly half the population.
Absolutely vital. Contributes about 16% to GDP. High-value areas like horticulture, livestock, fisheries are driving growth within the sector.
Any specific interventions mentioned, like fertilizers?
Yeah, they highlight things like urea gold. It's urea coated with sulfur, helps plants absorb nutrients better. And PM Pranam, aiming to cut down chemical fertilizer use.
But water remains a challenge. Irrigation levels.
Still a big vulnerability. That's why schemes like Per Drop More Crop and the Micro Irrigation Fund are so critical for water efficiency.
And credit for farmers. The Kizan credit cards.
Huge reach now, almost 8 crore operational accounts. It marks a big shift from farmers relying on informal moneylenders in the past to now having access to formal institutional credit.
What about modernization, machinery, tech?
It's a focus. High machinery costs are tough for small farmers, so things like custom hiring centers where farmers can rent equipment are important. Even using drones, especially empowering women's self-help groups.
And getting produce to market.
Big push there, too. ENA, the electronic market platform, connects farmers digitally to buyers nationwide. Better prices, wider reach. The survey also covers climate action in farming, allied sectors like fisheries, cooperatives, food processing. It's all interconnected for food security.
Okay, let's shift to climate and environment. India's position is interesting, low per capita emissions despite fast growth.
Yeah, about a third of the global average per person. And they've increased forest cover, acting as a carbon sink.
But still highly vulnerable to climate change impacts. Seventh most vulnerable, the survey says.
Right. And adaptation spending is rising, mostly funded domestically. This brings up that key distinction. Mitigation versus adaptation.
Explain that again.
Sure. Mitigation is about preventing climate change from getting worse. Cutting emissions, using renewables, efficiency. Think stopping the cause.
Okay.
Adaptation is about coping with the changes already happening or that are unavoidable. Climate-resilient crops, flood defenses, managing heat waves, dealing with the effect.
Isn't that funding issue?
International climate finance is still lagging and tends to focus more on mitigation. So countries like India often have to fund their own adaptation needs, which are huge.
India has a national adaptation plan, though.
Yes, outlining priorities. And there are efforts in agriculture, cities dealing with heat and floods, coastal protection like the Memanch TI Mangrove Initiative, water management.
Energy transition, still reliant on coal, but moving towards non-fossil fuels.
Heavy reliance, yes. But non-fossil fuel sources are now nearly half of installed capacity. The survey cautions against shutting down coal plants too quickly without reliable alternatives, learning from others' experiences. Lots of new solar and green hydrogen initiatives, though.
And finance is getting greener. ESG reporting, green bonds.
Yep. SEBI mandates, sovereign green bonds, directing capital towards sustainable projects. And the mission lifestyle for environment is a big push, too.
Promoting eco-friendly habits, like reducing food waste.
Exactly. Small lifestyle changes can have big impacts globally. Also promoting circular economy, resource efficiency, tackling pollution like plastics, and air quality.
So the overall climate goal, net zero by 2070.
That's the aim. But it has to be balanced with the goal of becoming a developed nation by 2047. It requires careful navigation, low carbon growth, but also energy security, jobs, economic development.
Okay, nearly there. Let's look at the social sector. The vision is inclusive growth, right? For Viksit Bharat 2047.
That's the frame. Focus on education, health, social security, jobs. And spending on social services is trending up.
Seeing results, like reduced inequality.
Some positive signs, yes. The urban-rural spending gap is narrowing. Inequality measured by the Gini coefficient has improved slightly in both areas.
Education initiatives, new policy, teacher training.
Key initiatives like the new education policy, NSHTK for teachers, Disha digital platform, showing progress in enrollment ratios, using tech like AI to bridge gaps.
Healthcare. More spending, but challenges like NCDs remain.
Yes, government health spending is up, out-of-pocket costs are down, which is good. But non-communicable diseases, mental health are rising concerns. Tech like Ayushman Bharat Digital Mission is helping, though.
And rural development. Roads, housing, water.
Big focus there. Schemes like PMGSY for roads, PMAYG for housing, Jal Jeevan Mission for drinking water are making headway.
Trying to bring development goals down to the village level.
Exactly. Localizing SDGs through panchayat plans, plus efforts to boost rural incomes via self-help groups, and making the MGNARGS employment scheme more focused on creating assets.
So the outlook is positive, but needs focus on delivery.
Pretty much. Health, education, rural development are crucial, but making sure the delivery works, improving learning outcomes, fostering trust, that's key.
Finally, employment and skill development. India's demographic dividend, that huge young population.
Massive opportunity. 26% age 10-24. Positions India potentially as the third largest economy by 2030 if harnessed.
In the current job market, unemployment down, participation up.
That's what the data suggests. Falling unemployment, rising labor force participation rate, especially among women, which is really significant. More self-employed workers, too.
Interesting that agriculture's share of employment rose slightly.
Yeah, while manufacturing and services dipped a bit, female LFPR increase is a major positive trend, though.
But there's a disconnect. Corporate profits are high, but job growth is modest.
That's a critical point the survey implicitly raises. Where are the jobs coming from relative to the growth? The formal sector is growing, though EPFO subscriptions have more than doubled.
What about support for unorganized workers?
The eShram portal is designed for that registration. Access to Social Security, kind of a one-stop shop. And new labor codes aim to balance worker security with business flexibility.
Digital economy and gig work are huge.
Projected to boom. Gig workforce could reach 23.5 crore, that's 235 million by 2030. Huge implications.
And a green workforce is emerging too.
Yes, especially in renewables. Over 1 million jobs in 2023. Women's SHGs are active in solar entrepreneurship. But challenges remain for women's employment, generally. Climate impacts, finance access, social barriers.
Wow, what an absolutely packed deep dive. We've gone from global politics all the way down to, specific agricultural schemes and workforce trends.
We really covered a lot of ground.
And hopefully unpack some of those key concepts. Disinflation versus deflation, GVA, NTMs, mitigation versus adaptation, financialization. The survey really is a roadmap.
It is. Not just numbers, but the thinking behind them. The challenges, the opportunities, the strategies for India's path to becoming a developed nation. Understanding those underlying ideas is so important.
Like knowing why disinflation matters or how trade patterns are shifting.
Exactly. Which actually brings up a good question to leave you, the listener, with. Thinking about everything we've discussed, what specific concept or trend from this deep dive really stood out to you? What will you be mulling over or maybe looking into more?
A great question indeed. Thank you for joining us on the deep dive. We hope this exploration gave you a clearer, more nuanced view of India's economic story.
We'll be back soon.
Yep, back soon with another deep dive into your sources.